a sense of capital. Aloha, ladies and gents. Welcome back to a new episode of A Sense of Capital Life Earnings. Your host of today, as always, is Julian. I'm very glad to have you. And if somebody has joined, as always, guys, I have no clue if you're not using the chat function, so feel free to join the chat and interact with me. Today it will not be a very long episode because we started quite late. Why? Actually, I thought the earnings release will take place 1 hour earlier, and then even this time it was released a bit later than regular. It is how it is now that Q1 2025 results are live from new holdings, digital banking services out of Brazil and active as well in Mexico and Colombia. I don't think I need to add too much information to this if you joined the stream, and so I think we should not waste too much time. Actually, you can see here is the release, here is the earnings presentation, and that's the reason why I was as well a bit late, transported the information into the Excel sheet. Actually, I think they redesigned it a bit and added some very interesting, well-designed slides, like you can see here, profit pool for key products. Very interesting to see what is the current market share and how much potential is left. So yeah, very, very interesting, and that shows that guys, we are just at the beginning of the story, of this legacy. However, again, as I mentioned, I transformed all the details, and so let's jump in, go through the KPIs. Maybe today I make it happen to really cover all of this in 15-20 minutes. Let's see. So guys, as always, I start with bottom and top line growth. Starting with bottom line growth, so profit. You can see here earnings per share. I already calculated it, used the net income out of the presentation. And guys, I forgot it almost. Quick disclaimer, as always, no financial advice, consultation whatsoever, and there's no guarantee for correctness of the provided data. So make sure you do your own research and make your own decision, because at the end it's your money. And again, no guarantee for correctness of the data. So I try my best, but it would not be the first time that I somehow copy and pasted numbers somehow wrongly. So hopefully this time I was successful. You can see here I copied net income and the weighted average shares outstanding in a diluted form, and this means 0.11 US dollar cents, which is actually a miss compared to the expectations by the analysts of 0.12 US dollars. So a bit lower. It's nothing too special, because if you are like me, then you are invested into this company because of revenue growth and not because of profit growth. I assume it's like with a lot of other big players out there, like Amazon for instance. As soon as they want to switch the button and change pace, they can set very easily, I think, the focus on profit growth, but that is not the stage currently New is active in and located in. So, however, I expected as well, I didn't expect any huge speed. What I wanted to see was actually 0.1 to 12 US dollars, so 12 US dollar cents, and that's for sure a miss, and I need to be strict here. So that for me is a negative rating. Yeah, very simple, very clear. Revenue looks for sure better, no doubt about this. I mean, forecasts have been 2.64 billion US dollars, and I want to see roughly 3.2 billion US dollars, which is already a huge beat. How I calculated this number is basically I've checked 1 year ago the development in terms of, or difference between the forecast of Q1 2024 and the actual results, and there was a difference of 540 million US dollars, which resulted in 2.7 billion, and I wanted to see this 450 million difference at least as well. And actually, they achieved the beat, and that is for me actually quite surprising, because when you check out the title of this dream, it's called Growth Winter, I think, because I really had doubts about the performance in terms of revenue in the past quarter in Q1 2025. And they surprised me very positive, and I think that's a very, very strong result, honestly, especially in the current situation of macroeconomics, political situation, and interest rates and currency exchange rates in Brazil. Yeah, so very strong actually from my perspective. So therefore, for sure, a positive rating. Yeah, and I can already see Fun with Drums is active in the chat. Kollega, glad you are in. Feel warmly welcomed, and you're mentioning gap EPS consensus per Bloomberg for this quarter was actually 0.114. The consensus adjusted EPS for this quarter 0.12. Yeah, so something in between. But if I had not calculated it unsuccessfully, it's definitely not something impressive, and something, at least from my perspective, under my expectations for this company. So so no matter if it's like this or like this, I think I would rate it negative in this regard, yeah, because it's just definitely not a high hit. But honestly, again, it's a revenue growth story for me, and revenue is way more essential for me than earnings per share, and so I'm so far actually very happy. And so this rating overall is neutral with a positive tendency, if we would put a stamp on it. But now we dig a bit deeper into the details, and as you know, I always try to remove some kind of seasonality and compare this quarter year-on-year growth to past quarter year-on-year growth, which means year-on-year growth would be Q1 2025 to compare to Q1 2024. This is year-on-year growth or decline. It depends, of course, how the development was. You can see here the revenue, and we have the net income. And yeah, obviously, I mean, when profit side is not looking that well, then the year-on-year growth KPIs are as well not that impressive. And you can see here, past quarter year-on-year growth was roughly 53%, now 47%. But honestly, guys, not that negative when we talk about net income, if you ask me, because still 47% year-on-year growth, considering that there is very likely not the focus on. Yeah, I'm fine with it. It's not, you can see it's not a strong development, but stronger. I mean, again, seasonality is an aspect. Stronger compared from Q1 to Q4. And yes, the steps in the past have been stronger, but I assume they reinvest very heavily and utilize this money, and it is okay. I rate it neutral. Even though it's not really impressive. Where's the revenue? Yeah. Fun with Drums. I completely can relate what you're saying in the chat. That's not impressive versus consensus in terms of talking about the profit side, but revenue beat is very impressive from my perspective. Surely, because honestly, I think they know what they are doing. I mean, they have a top management. They are very experienced, very well connected, a big player. It's not like a small business without any history, and they know what they are doing. And at least this is my feeling, and I trust the management very well. And I think at the current situation, I'm not sure how strongly they push the gas pedal and are expanding and reaching out to new customers and try to achieve higher revenue, how aggressively they do this and how more risk they go as a bank. I mean, as a banking institute, you can always lever your risks and grant more loans, for instance. Yeah, so spray more money across your customers, for instance, or provide better conditions in general, and therefore increase the level of risk for your business. That is not really, I think, a big challenge like in other companies, for instance, yeah, other industries. So that's not the skill. But on the other hand, I think they will not 100% go for risk at the moment and still achieving this kind of revenues. I think really good sign, really good sign. I didn't check the aftermarket price right now, but I assume it's in up, not that strongly, because based on my experience with new, even though they deliver solid results in the past, a lot of times it didn't move that strongly. Yeah? So I could accept if it's moving 5% or something like this, but honestly I think after hours, after market close, it will move something like 2 or 3%, because it's not a double beat, it's just a beat on the revenue side. But I will check it out later with you guys. So now we have another KPI, and this is annualized return on equity. So basically how efficient New is utilizing the equity of their banking clients. Yeah, that is the number what it's basically meaning. And you can see here year-on-year growth, past quarter 6% and now 4%. Not that bad, but you can see it's dropping. Yeah, it's still dropping. It's definitely higher than the results in 2023, and in 2024 they have been part of it. They have been higher and then dropped. So this is something I don't like to see. Again, I don't take it. Not that. It's not that essential for me, but however, I rate it for sure negative. Yeah, so not surprising if the profit perspective was in line. Okay, so is it correct? Sorry above, I said the adjustment was in line. I mean to say the GAAP EPS number was in line. Just EPS was, which is actually the market convention for new and most growth companies, has yet to be. Yeah. Wait, give me just a quick moment. People who are loyal followers to the stream, they know I'm more into the business itself, into the business cases, and yes, I'm covering numbers as well, but I'm not that much about numbers. When I talk about my investments, well, let's say numbers is not everything for me. Wait, I'm currently checking the what is stated. Wait, I can share this with you, I think. So these are the results on Seeking Alpha, a platform which I definitely can recommend. And honestly, I saw the price and and here as well. So it's definitely in the red at the moment. Not bad at all, because again, it's really regular that New is tanking, even if they provide okay results. And actually, I like to see it because I sold. If you check out my community posts of Instagram or here on YouTube, you see that I sold Alphen, I sold Potion of Hims and Hers in the last week and today. So I have some cash available for adding to my position, and if it stays like this, I will for sure add some to my position. Missing the average analyst estimate of 12. Yeah, you can see. So it is a miss. Yeah, it is a miss. However, not surprising. So put it back to 12 US dollar cents and keep it as it is. But let's go on and check out what is going on with the customer development. And on the first glance, that looked for me as well quite attractive. But we start with Brazil, and now the presentation, they set a way higher focus on Brazil, if I'm not mistaken. So you can see here, Brazil only numbers, Brazil only numbers, Brazil only numbers. Not sure if that was the case in the past, honestly. Can't remember that I have seen this kind of focus. And again, other slides are as well new. So I basically like it. But let's see first what is going on with the customer development. And again, I mean, we need to consider that they have, we can see what kind of share they're covering of the whole population in Brazil. I think 215 or 213 million citizens over there. And I mean, there is some saturation going on a certain level, so they will reach kind of a ceiling, and growth will slow down, at least in terms of customers, and they can start to basically squeeze the lemon a bit and utilize the customers more with cross-selling, with upselling, so providing more services and more intense their services and products. And you can see one quarter ago, year-on-year growth was 16%, now only 14%. But again, consider that they really acting on a high level, on a high scale. 2%, I think it's not that negative. And yeah, you can see here that they're covering, honestly, even with children, even with people underaged, yeah, they're covering almost 50% of the whole population of Brazil. Crazy, yeah, crazy, man. So, however, talking about this number, it's definitely an all-time high, and it's not bad. It's not the growth level of past quarter, but I don't expect they keep this growth level year on year. So for me, it's actually neutral. Yeah. Let's see what is going on with the rising star. High hopes are involved into Mexico. And I think here the story on the first glance looks a bit different, because we are far, far away of reaching a ceiling in terms of population. And you can see it here, Q4 2024 year-on-year growth was 92%, now 67%, and honestly a jump of roughly 25% lower is too much for me, especially when we talk about a market which investors hope which will step into the footsteps of Brazil, yeah, which will be kind of the successor of it. And yeah, there are really high hopes involved. And yeah, Mexico, they received in Mexico a few weeks ago full banking license in the market. Finally, I didn't even expect this anymore, but they make it happen. So that's great. That shows how capable they are and how good they execute an approach. However, just 1 million up. You can see in the past quarters it was a lot of times more than 1 million, and we have seen it on the year-on-year growth as well. So on absolute scale, on the relative level, not satisfying, and that is something I really don't like to see. And honestly, I think that the stock is currently negative and dropping is not primarily because of the earnings per share. I assume, or at least for me as an investor, the customer growth in Mexico is more essential, because again, that's more kind of a future outlook and the potential which will result out of it. And I think that is really the first more essential and more negative aspect when we screen the details today. For me at least. Let's see what is going on in Colombia. Maybe even this even younger market is developing stronger. And here we see past quarter year-on-year growth, crazy number, 180%, and now 230% year-on-year growth. So it's actually accelerating, 500,000 quarter on quarter up. So quite good result, I think. Please let me check if the number is correct. Yeah, looks good. So, and let me check the other one as well. Yeah, okay. Not that I do any mistake here. But this actually is good, so that we can see that year-on-year growth is accelerating, not deaccelerating. I mean, again, it's another stage compared to Mexico, and a way another stage compared to Brazil. But nice to see, and that is something positive for me. Yeah? That's something positive. But however, I mean, customer growth is not that important at the moment for me for Brazil, and not that important in Colombia. It is most important for me as an investor in Mexico, because is the market which you can hopefully soon start to monetize as well, how they now currently monetize the Brazilian market. And we want to see some acceleration. It might be, I mean, it's definitely worth, I think, to spend some time and listen to the earnings call, or read at least the transcript in regard of Mexico, even if you just push STRG and F to find Mexico. You just search for Mexico in the transcript of the earnings call. I'm sure someone will ask questions in this regard, or even the management by themselves proactively will add some information to Mexico. And maybe there is some reason behind it. Would not surprise me that heavily. Maybe it is even connected to the terrorist situation with US and Mexico. Who knows? Yeah. But maybe some other reasons can be different kind of parameters which have an effect on this. So let's see. So customers in total, let's check out what is going on here. And I mean, look guys, it doesn't look that bad. Yeah, 22% last quarter year-on-year growth, now 19% year-on-year growth. Not that bad. I mean, I put it in a neutral one because I think the numbers are quite fine and fresh with Brazil and Colombia. That's completely okay from my perspective, and it could be way worse. However, again, Mexico, not nice. So that is this category neutral with definitely a negative touch, with a strong negative touch, but still neutral, I would call it. Yeah. And now we go a little bit deeper into the numbers, and that are the last numbers already for today. And then I will check one more time the comment section, and I will check out what is going on with the current price, with the stock price, and if there are already some reactions on Seeking Alpha by their users. So we start with the activity rate. So I mean, they have this kind of customers, 118 million overall, which is a huge number from my perspective for a digital bank. I think it's the largest digital bank by customers outside of Asia. Incredible achievement. And you can see that is the activity rate of those customers, and it's actually increasing. Yeah, and that shows. I mean, it's always nice to have a huge load of customers, of users whatsoever, but there are very popular companies out there, even publicly traded companies, so stocks, where I think the numbers are increasing, but the customers, a lot of them might be not even real or inactive, let's say like this. And if those numbers here are right, you can see that's really quality. This 180 million is quality because 83% of them are very active and getting monetized currently at the end. And it's nice to see that this number is still growing, because 83% is already on a very high scale. Even if they would just keep this level of 83%, it would be completely fine. But that they are re-accelerating it. You can see one time they achieved a higher number, but other than that, this is the all-time high. It's for me a positive, very positive number. Shows that customers are loyal, they getting attracted by the solutions, and there's some kind of commitment and binding existing. Nice to see, and for me, that's straight positive. Now we take a look how much, that's ARPAC stands for average revenue per active customer. So how much revenue they get out per active customer, per out of this 83% of this 118 million customers. And this is something which looks good on the first glance, because you can see it's like a ladder going up, or like stairs. It's developing quite strictly. Yes, it was already higher, but it's re-accelerating. But again, that is as well something where you can put a lever on and has really a direct effect on this, very simply, at least from my perspective. However, that is something where, when you compare new to the legacy banks in Brazil, you know very well that there's a lot of room for improvement. So these legacy banks, which have stores in different areas in Brazil, for instance, they make way more money per active customer than you. And so here a lot of potential. I mean, okay, they're still launching new products, they're intensifying it and making it more attractive, and people, it's still comparatively new business, or let's say new company in terms of banking, and customers just regularly needs to catch a certain level of trust, and then going more for using the portfolio of products and services which getting provided by you. Yeah, I think it's just a regular process. You don't join in some countries at least, yeah, you don't join a bank and give them all your money and use all the services they have without even thinking about it, or even with certain period of time to achieve this level of trust. So, however, coming back to the number, for me it's great that it's re-accelerating. That is what I like to see, and I would not be surprised if we catch next quarter, cover the all-time high or even a higher high. So for now, however, it's positive. And now we have the revenue side, so the income side, and now we take a look on the expenditure side. So what is the cost to serve per customer? And I think it's month. If I'm not mistaken, month or quarter, but I think it's stated here quarter, but I think it's month. However, you can check it out by yourself. Doesn't make a big difference because we compare it to the older numbers. And here, actually, new is extremely strong compared to all legacy players in the market in Latin America, because they don't have the stores, they don't have this huge amount of stuff, and big need likely for doing marketing. I mean, they do a lot of marketing, they are very present, but more on a very focused way how they can address the customers, and not that they have a lot of banners they need to rent in some of the streets, this kind of stuff, or they have a lot of bankomats, ATMs, this kind of stuff is not. They don't need to take care of this. They don't need sales technicians for the ATMs, devices, and this kind of stuff. So they are very, very strong in terms of cost per customer to serve them, and you can see getting even stronger. And I would be 100% satisfied if they can keep this level here as well, but that they can improve it is crazy good from my perspective, and that is as well strong and I can only rate it for this positive and green, actually. And here we have the net interest margin. Net interest margin is as well a very popular number, and I'm not a banking expert. I can tell you, I can invest in Hims & Hers, which is a company which is active in the telemedicine space, and in Grab, which is active in food delivery and mobility space, and cybersecurity company, another one, and gambling company. So I'm not a banking expert, and that is my focus, but I fear the net interest margin is a very crucial number, crucial KPI, because it is basically the difference of the interest you pay for the money of your customers and the interest for granting money. Yeah, so deposits and granted money. Yeah, so basically the classic banking business, if you want to state it as this, you get money and you borrow it to another person. Yeah, that is net interest margin, let's say like this, if I'm not mistaken. And so let's see what is going on here, and you can see it's actually lower than past quarter and lowering already in the past quarters. So almost 2% lower than 1 year ago. Not that nice. I assume there are reasons maybe behind this as well. It might be the case that New just offering very attractive conditions, and again they are not that profit focused. They want to get access to a huge market, basically acquiring a huge amount of customers, and then setting a focus on profit development. So it's not that negative in general, but however, that it's developing negatively, I have no other choice than leaving a negative rating here. However, so far so good. And now we check out the default rates. Default rates is basically the payments. Again, check out if that's the truth by yourself, but I think it's the reliability of the customers, if you want to state it very shortly, which means that money they miss out as a percentage and they need to write off. Yeah, and the higher this is, the higher they go for risk. So this is a good indicator which you can use to see how strong New is willing to go for risk and really spread, for instance, loans, so money, basically debt money, liabilities to different clients and customers of them. Yeah, and you can see the different day periods, and when you compare it, you can see in terms of the mid or long-term perspective, they're getting a little bit more secured, and we want to see lower numbers. Actually, we don't want to see higher numbers, we want to see lower numbers, so that's good. So we rate this here positive, but the 15 till 90 days period has been increased. Yeah, and it's almost all-time high if we compare it to everything else than Q1 2024. Quite a strong jump with 0.6%. Not nice. Not nice, yeah. So overall, we rate it neutral. It's okay. But you can see, I mean, we have this very banking specific numbers and they look overall nice. Yeah, they look overall nice. I think that is a very crucial number, and maybe they will add some color in the earnings call to it. I'm quite sure, actually, quite confident. Analysts will for sure ask questions, I think. This is not something too special, I think, but great to see that this is developing well. It's very clear number for me as a regular private investor. I understand those KPIs, and the development looks solid, very straight, positive. Then we have this customer base. Again, that's for me today the biggest negative aspect, because of really the rising star market Mexico, and somehow it seems to be not developing that great, whatever the reason is. Might be again some macroeconomic reasons, might be that management is doing this on purpose and not pushing the gas pedal that strongly in this market. Not sure. Might be that they are as well some kind of surprise, that there's not really a good argument for it. However, that is for me the most negative reason for today, next to really likely the net interest margin and the overall profitability, which doesn't look that great. Yeah, it's a kind of a miss. Double beat would change definitely heavily the results, and I think as well how investors would be satisfied or not. However, I mean, this again is a blend with neutral to positive, because revenue is more important for me. This one neutral to negative, I would say, and this one here is neutral to positive. Yeah, so this one somehow overall I would rate it neutral, more or less neutral, even though this is for me actually the most important, the customer base. However, overall neutral, and this overall neutral with a positive touch because revenue developed so strongly. So overall for today's results, Q1 2025, new holding, I will leave neutral and yellow verdict to it. That's it. So now I will quickly check what is going on. No, I will take a sip of water. And now I will check out what is going on here with the comment section. A lot of comments have been left by you guys. I love it very much, especially fun with the drums. I'm not sure if we ever had the chance of having a chat here. I'm not sure if you're new to the stream or not, but I'm very impressed and I like this, that you are that active. So guys, he's a role model for you. That's really nice to see. So what we have here, a lot of comments. Growing adjusted earnings at 37% year-on-year tells me the business is ripping. New now trading at under 17 times 2026 earnings per share. Very attractive valuation in light of both current and future growth. Banking license. Yeah, banking license, I think you're talking about Mexico as well. And yeah, I don't see it as well negative that much. And I think honestly, what I rate here is just the earnings results. I'm not rating it in terms of valuation. That for me is, you can see it here. And of course you can follow me as well on Instagram if you like, or subscribe to this channel here of YouTube. Feel free to do it. However, that is what I use to evaluate the company. And I mean, that's already a few days old. You can see here it is from the 2nd of May, and so more than 10 days old, 10 calendar days. But whoever new here, you can see a sales growth expected for 2025, 2026 is 27%, so a blend out of it. EV sales is free, which is not that cheap for a banking business, but however, and price earnings 18. I mean, look, below it, SentinelOne is a cybersecurity company. Cybersecurity stocks are regularly expensive, and banking businesses or companies, corporations are regularly a little bit cheaper compared to cybersecurity. So that is what you need to keep in mind when reading those numbers. However, all of this doesn't look bad, yeah. And my fair price comparator, don't ask me how I calculated, but I calculated it. You can compare different companies based on those numbers, and when you compare them, you can see with 1.9, and now it will be a little bit lower because of the rising stock price in the past days. Maybe it's 1.8. It's still okay. I don't think new is cheap actually, but we should not forget it has huge potential, and as soon as they start to really set the focus on profit, it can definitely go crazy. And who knows what is going on with Argentina in the future, or Chile, or other markets in South Latin America, or as well even the US. A lot of Hispanics are living there, and I assume they know new from the roots from Mexico, for instance, from relatives or whatsoever. And as soon as it would get rolled out in US, it sounds a little bit irrational, but on the other hand, it might be a good catch. Yeah? Why should not their business work even in a more saturated and more competitive market? Yeah? It will not work that easily, maybe like in Brazil, but yeah. So for me, valuation, I value it as okay. I think, look, again, very likely if the price stays solid or even drops till tomorrow, I will purchase tomorrow new shares, and you will see it on Instagram and here on YouTube in the community section. But it's not for me the cheapest company I've ever have seen. However, let's go back and go through the comments. Why is stock dropping? Yeah, I told you, I have no clue, but at the end I would say Mexico is the major reason. That is for me the major reason. Yeah, but I'm not sure if that's the truth. So then Fun with Drums is adding, the stock is dropping primarily due to Benzinga's reporting on their earnings. They compared news GAAP EPS to an inflated adjusted EPS consensus number, spun it as a miss. Okay. If that's the case, then it's ridiculous. When only Bloomberg and other early reporters had put out headlines, they correctly all highlighted the adjusted net income beat and the robust revenue beat. Then came along Benzinga. Okay, so if it's kind of a technical error in terms of communication of media, crazy. That sent a positive reaction, flipping over into a sell-off. Benzinga does this from time to time, depending on the name, the stock. Okay, next comment from Fun with the Drums. News smashed the Bloomberg consensus revenue estimate by more than 5%. Very impressive. Benzinga, along with misleading comparing new GAAP number to the adjusted non-GAAP consensus estimate. Guys, sorry for reading all this kind of stuff. And I'm not even good in reading, but I try my best. Then Fun with the Drums is writing, also reported the revenue number as a miss, citing some BS. I think you know for which this kind of letters stand for, consensus, which I don't know where it came from. So a double beat got flipped to a double miss, probably corruption on the part of Benzinga. A lot of shorts still out there in this market, and they've been hemorrhaging money since. Hey, but look, colleague, at the end, good for us. Good for us. Cheaper prices, and the stock price will recover anyhow, I assume. But crazy story. Very nice that you reported. It's crazy if that's the truth. But again, I think if you do your homework as an investor, you know already what is going on. And if you are watching this stream, you're doing your homework, right? No, just joking. But again, then you see revenues growing very well, earnings per share, even though if Benzinga communicating it's a miss or whatsoever, it's not a strong miss. You can see the numbers are overall solid for sure. I mean, there are more numbers in the reports. Maybe there are some hidden traps existing, which I couldn't check that quickly. But at least with the numbers, which are for me essential and which I always cover, I'm quite satisfied with the results. The recent market headline seller worst, they tried to short, new already rebound to plus 2.66% off the manipulate after hours low. Very impressive default rate. Yeah, for sure. I mean, at least 90 days plus, if I'm not mistaken, looks very solid. 15 till 19 days, at least what I can see, not. Here is number 2. Yeah, hey, Fun with the Drums might be the case. Don't take it too negative, but again, even if it would be like this, yeah, even in case it would be like this, I would rate it neutral. I would not rate it, for sure not with this results positive. But again, for me, it doesn't have a big impact because overall I rate it neutral, and most of the time I rate my companies neutral, and that is, I mean, I have high expectations to the companies. I'm only invested in 5 stocks, and I have high expectations to all of them. Yeah, and in terms of new, what I want to see is revenue growth, primary revenue growth. Of course, there are other numbers which should be in line, but look, if everything would be positive, but only revenue growth would be negative, it would be for me a hard miss. Yeah, and I would never grant as a neutral rating or at least a positive rating. Never. Very likely even a negative rating if they really missed hard in revenue and everything else is very positive. Would not make a big difference for me. So that's the case. So I'm completely fine with this. You're then right, cheaper shares are better additions to the portfolio than more expensive shares, especially if the cheapness is a result of reporting malfeasance rather than the underlying business. Yeah, 100% true. 100% true. And at the end, I think there's a lot of noise out there. Anyone who's more than a week active as an investor and really covers companies and see it as a business and not just as a stock, as some kind of green or red number which goes up or down, you know that at least from my perspective, markets are not always that efficient, and but it's just a matter of time that good businesses, the stock price will follow, basically. Yeah, classic stuff actually. So Last but not least, we will check now the stock price after hours, after market close, and then I will check if there are already some reactions at Seeking Alpha. So let's see what is going on with the price. It was minus 6%, and now it will update in a moment. It's minus 3.6%, so not looking that badly. For sure, if I will finish this call, I will check what is going on. If I have the chance to purchase through my broker after or some shares, then I will do this. Yeah, that's my plan. If not, very likely tomorrow. Not too much, because my position is already quite large. It's the second largest one, but for sure I will do this. You can see, and it's even improving further. Okay, I need to be quickly so I get a good price. Okay, now I can wait. It's dropped again. Okay, and let's see what is going on with some comments. If there are already some comments existing, 3, if I'm not mistaken. Sounds way better than last quarter's support. Yeah, I would share this opinion. Then we have Snaken seeing mixed reporting on whether revenue was a beat or a miss. Can't we just agree 40% growth is damn good and not worry about the slight miss or beat? Yeah, for sure. So I'm fine. I'm okay at least with this as well. But again, expectations are high on new. They are not priced for perfection from my perspective, but as well not priced for bad performance either. Great numbers, would like them to expand Argentina, Peru, Chile, El Salvador, for sure. I can relate to this very, very well. Yeah, doesn't look that bad. Fun with the drums writing, new up plus 3.54% from after hours, bottom live prices. Yeah, true, they recovered. Price is jumping. I'm not the only one who identified the Benzinga manipulation. Yeah, I mean, first of all, you need to read these headlines. And in general, again, as I mentioned, if it's just a few hours or a few days down because of something like this, doesn't make a big difference from my perspective. All good, as long as you're not leveraging and leveraged with whatever 8 times multiplier, and you lose a lot of money after hours because you are very bullish or whatsoever. But I think most of us are not. So guys, last words for today are addressed to outlook of the last days for this earnings season. You can see we already covered 4 companies. Alphen was so bad yesterday, at least from my perspective, that I need to sort this position, which really hurt me a bit. Really, my heart as an investor was bloody at the moment. However, now I'm not an owner anymore of Alphen shares. So these are the 5 survivors. And 2 of them are still left in terms of covering the earnings results. So next one will be on Thursday, gambling.com, a marketing company, basically performance marketing company, which connects gamblers to gambling platforms and sports betting platforms and poker and bingo platforms, if we want to keep it as simple, and a bit more subscription business. But this is what they are doing. Flying a lot under a lot of radars might be interesting for you, so feel free to join as well. It is my newest investment. And then the earnings season will end with SentinelOne, cybersecurity company out of the US, on 13th of May, so in roughly 2 weeks. I'm quite excited for both of them, and honestly guys, because I sold a quite strong portion of shares of HIMS today, I can imagine that today or tomorrow I invest some money in gambling.com, in SentinelOne, and very likely in new. That is my plan. At least. I'm not sure with this new at least, because again the position is already, you can see it, large compared, here you have it. It's not 100% up to date anymore, but roughly it's quite large compared to the other ones I'm a shareholder of, and so let's see, but likely I will invest in SentinelOne and gambling.com, and new maybe, but I guess as well at least a small amount of money. So that's the case for today. Again, guys, if you like what you have seen here, feel free to like and subscribe the channel. Feel free to follow me as well on Instagram. A Sense of Capital is my account there. And Fun with the Drums is stating the price is jumping. So let's see if that's really the case. Yeah, it is kind of jumping. I will make sure it's now, in a moment, it will jump a little bit to the more positive side, even if it's just a small piece of puzzle, which I will add to the positive price development. However, again, thank you very much for joining. And as always, final disclaimer, all of this was not financial advice, consultation whatsoever. And again, very special thanks to you, Fun with the Drums. I really appreciated your interaction, and I hope you will join as well latest in the Q2 2025 new earnings stream, or if not even earlier at some other shares I'm a holder of. So I highly appreciated your interaction. That was I really appreciated it. That was really nice. And yeah, guys, take care of your money, make your own decisions, do your homework right. If you invest in single stocks, and try to enjoy the journey no matter how it ends. And more important than any money, as always, is health and a good social environment. So take care of each other and stay healthy. Yeah, that's it, guys. See you next. A sense of capital. So take care of each other and stay healthy. Yeah, that's it, guys. See you next. A sense of capital.